Okay, for lesson three, I wanted to start off with um, set up a M1, sorry, Google Authenticator app on your phone with my main email. So let me show you a video of that. Uh, so here it is. So just watch this for, okay. And I'll also add in all the login information and passwords. Um, on your password manager app. It's called what's it called? It's called I always forget the name of it. It's called OneSafe. So I'll add that soon. So you have access to everything. Okay. So now I want to go back and talk about what is an ETF, S&P 500, and the stock market. Um, Last time I said an ETF was an exchange traded fund that holds a number of other stocks. And you remember what stocks were. They were ways for us to invest in the companies and businesses. So, like, let's just say we're interested in investing in Apple stock, and Apple company makes our phones and makes a lot of other devices, and it's a good company. And their ticker symbol is AAPL. That's a stock. So an ETF, for example, is a company that puts a lot of stocks into this ETF. So let's just go, for example, SHD is an ETF that holds a bunch of different companies. So if you go to Google and type in SCHD here, just have to wait here, and then you look at the all-time chart. Let's see what it's done over the past. So for ever since looks like 2011, it was trading around $10, but now it's at $27. So if you would have bought it $10 and sold it $27, you would have made a good profit. But as you can see, like in 2020, when we had the COVID, um, the COVID virus, and this crashed, what they call crashing the stock market. So the stock market went down a lot. It went, and SCHD went down uh, a lot, like the market did. And you can see SCHD went down a lot during the COVID time period when the market crashed, but then it recovered and it went back up and it went kind of sideways. And now it's going up a little bit. So it's now at $27. It's going kind of sideways right now. But this is a good ETF. And I want to show, like, if you go down here on the holdings, it tells you the companies that investing in. So these are the top 10. I think they hold 100 of 100 different companies, but these are the top 10 companies that SCHD invests in. So it's like 40% the of the portfolio the SCHD invests in is are these companies, and these are good companies. You know, ConocoPhillips, Chevron, Pepsi. These are large companies in the U.S. That's been around for a very, very long time, and these will continue to do well into the future. And then the sector is, you know, how much, what percentage of the portfolio is invested in these sectors. So energy sector, the consumer defensive sector. So like, for example, Chevron is a gas company that, you know, sells gas and oil. And that company is in the energy sector. It's categorized as an energy stock. And like PepsiCo would probably be in the consumer defensive stock. So they categorize the companies where they belong in these sectors. And then I think there's only like 13 sectors or so, 10 sectors. So financial would be like bank stocks and so on. And technology, you know, maybe Apple is a technology stock. And so they're just showing you, okay, what percentage of the portfolio in SCHD invests in these sectors. And um, they're very conservative here. Right now, technology is like the high growth sector right now that's been growing a lot faster than the other sectors, but it's good mix. It's a well balanced portfolio, so that's why I like SCHD, and SCHD into the future will do well. Um, and I want to go over looking at the dividend growth and history on the ETFs, but before I do that, I want to talk about S&P 500. Um, if you go to Google, most people, when they say, how's the market doing? They look at the S&P 500. And S&P 500 stands for Standard and Poor's 500, which is they call it an index. And it's an index that tracks 500 of the biggest companies in the United States. So um, let's just go S&P 500. Um, and it's an index, like I said, it shows, let's go to max here. You could also look at that on, well, you can't. So you can't invest in S&P 500. It's just an index showing how those 500 stocks combined together are doing. Okay, so over time, S&P 500 index with those 500 biggest companies in the U.S. has done pretty well over, you know, this is back in 1996. Now it's, you know, 2025. So uh, during this time period from 1996, it's gone up. So the stock market, basically, people look at this and they say, okay, stock market is going up. So let's look at just last 5 years. Um, mm, doesn't show the COVID crash. It looks like, let's see. No, it doesn't. So let's go back here. Can you zoom in? No, it doesn't zoom in. Okay. Um, so during the COVID crash, the stock market went down a lot. So it doesn't look like much here, but if you zoom in, it's a big drop. It's like, well, I think I want to say it's 50% down, which is huge. So it's a huge drop there. It's going to have these crashes like during hard times, like the COVID virus, and everything went down. And this index that tracks the U.S. economy, basically, or the market, they call it stock market, uh, shows you how it's doing. So during this time, a lot of stocks went down. So a lot of ETFs will also go down like 30 to 50%. And then in 2022 had remember what I call a bear market, where the economy wasn't doing very good and it was going down and there was fears of recession and everything. So this went down, you know, probably uh, as bad as COVID, but it took a longer time to go down. So this was all of 2022 that the market just kept going down, down, and down. And people look at this S&P 500 index, which is also called SPX. So we can go here in the Yahoo finance and just type SPX. And this is the S&P 500 index. And you can look at the all-time high, all-time pricing. And you can see how well it's done over time, even though we had these crashes in between. But overall, it will always go up because the US economy will always go up, and it always has. Okay. So, like I said, you can't buy this S&P 500 index because it's just an index that tells you how it's doing. And what people have done, or what other companies have done, is they created ETFs for the S&P 500 index. So one of the ETFs that they've created is called VOO, and so now uh, you can purchase and sell, buy and sell the S&P 500 index using VOO. Um, it's not showing for some reason. Is it showing? Let me try that again. VOO. Okay, yeah, that's right. So it's $27 right now, and it follows the S&P 500 index. So this is something that you can purchase, but it's an ETF. It's okay ETF, but I don't want you to invest in it because it has these large. It follows S&P 500, so it'll have a large uh, crash. So I want you to invest in other ETFs that doesn't have these large pullbacks, what I call them, or drawdowns. Um, I want to invest in ETFs that during these hard times, like COVID crash and bear markets, I don't want it to go down that much. This is like 50% down. I don't want that. I'd want maximum maybe 20% down, which is okay, because you don't want to see your portfolio. Let's say you had $1 million. Say you had $1 million portfolio, for example, and let's say it went down 50% during the COVID crash. It went down 50%. Now your portfolio is only worth $500,000. Are you going to be able to sit there and see that and watch that and be okay with it? Oops, wrong one. No. So maximum I'm willing to risk. I mean, the maximum I want to see for a drawdown is like 20%. And that'll still be $800,000 that you'll see in your portfolio, but that's a lot better than seeing it come down to 500,000. So that's why um, there's only a few ETFs that I'm willing to invest in, and these are it. These are the core ETFs that I want you to invest in. And I'll talk about these in the next lesson. And then these are some of the other ETFs that I like to invest in for growth. This is for stability, for safe, stable ETFs. And then this is like, I want some growth, but for a little bit of more risk. And then this is very safe holdings, government bonds and government treasury, like I talked about SGov last time. These are very safe too. But I'll talk about them in the next lesson. Today, I just want to go over what is an ETF, what is S&P 500 and the stock market, and how these are related. S&P 500, basically, when people talk about the stock market, they're referring to the S&P 500 index and how well that's doing or how bad it's doing. And then I just talked about the list of good ETFs to invest in, and these are it. And then I think that's it for this lesson. We'll keep it short. We'll talk about the dividend investing. Actually, let me talk about this other to look at dividend growth and the payout history. I want you to go to a website called seekingalpha.com because Yahoo Finance doesn't show it. And here you can create an account. I already have an account, but it's a free account. Just create a free account and they'll just walk through how to create an account. It's pretty easy to set up an account. You've done that before many times on other websites. Um, And then just type in, let's just look at VU, for example, the S&P 500 ETF. So this is one you can buy and sell. And what I want you to, don't worry about all this. It's got they have their own charts and everything, just like Yahoo Finance. And a lot of these, like the holdings, they'll tell you the same thing, the sectors, and then the top 10 holdings and the percentage. Um, so that's same information you see in Yahoo Finance, but what Yahoo Finance doesn't have is this dividends tab here. And then ignore this. They have their own scoring system, and it's a paid option. So in the free account, they're not going to tell you what the score or grade is, but like here, it'll tell you the dividend yield. Um, it's only like 1.2% right now. Um, but under dividends, what I want you to look at, what's more important is, has the dividends been increasing over time? So let's look at 10-year. So you can see from 2015 to 2024, the dividend has grown. And that's what I want to see in an ETF. And this is just the table showing the dividend yields over time. So that's one thing. Make sure over time it's been going up. The dividend safety, this is not going to show anything, but dividend history also want to look at the 10-year, maybe the max over time. I want to see that they've been paying dividends through all time. Okay. I mean, it's been going up, down, up, down, up, down. But overall, if you draw a line from here to here, it's going left to right. It's going up, right? So that's what you want to see also. And here's another chart of a dividend. If you look at 10-year, it won't let you. You have to have a account for that. But over time, it's just been going up. So that's what you need to see in these. And you can type in another symbol like SCHD is the one that I like a lot. And let's look at the max dividend history. Look, they've been paying dividends over time for many years, and it's just been going up. So it's been increasing. Then dividend growth. Let's look at the 10-year growth, and it's been going up. So that's what you need to see in these dividend ETFs that I want you to invest in. Okay. Um, so we covered that, and then one other thing is, um, let's look at the chart here. As the dividend yield, it shows you in the summary. Well, this is S&P 500 index. I don't know why it's not showing here. It should show, but let's look at SHD. So summary. Okay, let me pause this. Why it's not showing I don't know why it's not showing my dividends. Okay, so apparently I was looking at SPX, right? The S&P 500 index. And I was looking at the all-time charting. And since you can't invest in this, it doesn't show you the dividends. And I was trying to look at a different company here under this quote lookup, but that only updates the right-hand side, looks like. Oh, now it updated. Now it's not. Now it's updating it. I don't know why it wasn't updating before, but now it's updating here. It says VU ETF. This is the one we can invest in. Here's the yield, 1.19%. Um, so just want you to know that as price goes up, the yield goes down. And as price goes down, the yield goes up. So the yield will change as price moves up and down. That's all I want you to know, okay? But in the end, I just want you to look at this, and at the current time you're looking at it, and that's how much they're paying in dividends. But just know that if the stock goes down and you buy it, usually the yield will be a little bit higher, and so on and so forth. And then over time, the yield will, if you bought it low, over time, your yield will increase based on the price that you bought it at. Okay. So this 1.19% right now, if you bought it at this price, you'll get 1.19%. But let's say you bought it back here at $350 or so. Well, the yield back then was maybe 1.19%, but now that price has gone up, your yield will have gone up because you bought it at a lower price. So now maybe your yield, this is just just a guess number, maybe your yield is now 2.5% because the stock has gone up, but you bought it down here. So just know that on these like good ETF companies the price goes higher, it increases over time. Uh, the time you bought it at, and as you hold it for a long time and into the future, your yield will go up as well into the future as long as the ETF goes up in price in the future. But during times of uh, stock market crashes or bad economy, uh, this can happen, and then your yield can also go down. But just keep holding on to it because eventually the stock market will recover and it'll go back up again. And in time, it'll just keep going up. And then over time, your yield will go up and you'll get paid more for as long as you hold that ETF or bunch of ETFs. Okay. Okay, this has gone on long enough. So I'll stop there. And then lesson 4, we'll go over this other stuff. All right. Thanks for watching. And as always, watch. And if you have any questions, let me know.